Rahul Sharma is here with us to talk more about markets. Let's talk technicals first before we come to your own ideas, especially on the F&O side. I mean, 19,500 was not being taken out in a hurry. In fact, it was appearing to be a hurdle point. In fact, 44,800, 900 still a sticky zone for Bank Nifty. But do you think the chances are this time it will be taken out?
Yeah, so a very good afternoon. The last time we met, last week, same time, Nifty was sort of, doing well, but it was finally that momentum which was lacking, the thrust which was lacking, and it had to come from one of the index heavyweights. So if you recollect, we had a buy on Reliance, and Reliance has been the star performer for this week, helping the Nifty stay afloat even on a down day. Now, finally, I think that mini rut that we were in, mini consolidation that we were in, that consolidation is over, which means Nifty should aim for the next target, which is approximately around the 19,800 mark. Now, the good news is IT has come back into play. IT is supporting the markets led by TCS numbers. I think, this is the only sector which has not performed in the Nifty 50 space, apart from metals, which has been choppy. So we believe there is more upside to the IT pack, where it should aid the Nifty going up, and banks which have been sort of a laggard, I think, should come back into momentum, especially since Bank Nifty crosses the 45,000 mark, and their thrust could be coming in from especially the PSU banks. So net, I think it's a good market to be. We feel that banks and IT should continue to do well. Nifty should be headed for the 19,800 mark. Today we have early signs of a breakout. The closing above the 19,525 mark will confirm the same. And as far as the Bank Nifty is concerned, there's a good chance that once we cross the 45,000 mark, the next immediate stop could be around the 46,500 mark, which is around 1,500 point on the upside. So both the indices, the outlook is positive, and the good part is
that a bad line?
Sectoral rotating into play, which is aiding the index to stay at higher levels.
Let's talk the other part of the market, which again, because the dollar index falling to 1 year low, is sparking a rally in metals. And if you talk about metals, Tata Steel, JSW Steel, of course, JSW has a index inclusion angle and flows as well. But where would you be most comfortable taking along in metals right now?
Metal index is shaping up. Now, if we talk of the sectoral leader, Tata Steel, the risk reward is still favorable. We have been recommending this on the long side around the 112, 113 levels. Still, it can be bought. I think 125 is an immediate target, and 140 as possibly a medium-term target can be expected on the same. Now, traders would be interested in JSW Steel because that is more of a breakout trade, and above 800, the breakout takes place in JSW Steel, and it's not a multi-day or a multi-week breakout. It's a multi-month breakout, which is on the cards, which could push the stock to close to around 900 in the short term, and possibly 4 digits also towards the in the next couple of months' time. So metals, is one of the sectors we feel that the traction should be positive. Yes, it is driven by a lot of what is happening in China and the commodity prices, but we feel most of the negatives are factored in, and slowly, gradually, we should see this sector come back into the momentum days, which we are used to on some of these counters. So I think positive outlook on both of them. Overall, metals are expected to do well from here.
Right, Rahul, this is Vinny joining in as well. Currently, if you could just start by telling us which are your top picks and what are your positional calls you're looking at right now then?
Yeah, so, our eyes on the financial names. The Fin Nifty has completed a retracement and it's ripe for a reversal from here. One of the counters that we like on the long side are Bajaj Finance. Now, Bajaj Finance saw a fantastic rally happening where almost it tested the 8,000 mark, saw a pullback. Now, I think the time is right for another round of upmove. So, Bajaj Finance can be bought for a 8,000 target. Stop loss can be had at 7,300, and we feel that the mini correction is over in both Bank Nifty and financial services, and this stock should pick up from here. The second idea is on the auto space. So auto, what is happening is the auto index is having the time of its life. After a mini cool off that we saw in auto index, finally, a follow-up round of buying is coming in. Ashok Leyland is something that we particularly like. There is a multi-month consolidation, multi-month breakout, which takes place above the 174 mark. And the kind of volume participation that the stock has seen in this week, it seems like the breakout should happen anytime soon. So from a positional perspective, one can look to buy Ashok Leyland for targets of rupees 200 on the upside, have a stop loss placed at 160. And I think once the 174 level gets taken out, could be a mix of short covering as well as a fresh long addition that could propel the stock higher. So Ashok Leyland on the long side and Bajaj Finance from the NBFC space looks good to us on the long side.
Rahul, some of the small cap names I would like to know your view on the charts. RPG Life, the stock has shot up 6% on good volumes in today's trade. And even Phoenix Mills, perhaps got to do with the monsoon discounts happening in Phoenix Palladium or many others, but I don't know that. But again, a good move coming in. Can you talk to us about the charts of these two?
Yeah, so what is happening in this bull market is the strong has become stronger, and once any stock gets into a blue sky territory, stocks become unstoppable. Generally, what we look at is if volumes are drying. So as far as RPG Life is concerned, today is the first day that the stock has actually taken out the previous high. Volumes have just picked up today, so I think there are long legs to it. Another 10 to 15% upside can be had in the same. So as far as direction is concerned, the best thing to do is have a trailing stop loss and keep on riding on the long side, because you never know the kind of performance one can expect when the stock hits a target territory. I think as far as Phoenix Mills are concerned, a similar structure over there as well. I think you've caught both of the stocks bang on. And the best part is this is the first day of this stock as well, where the consolidation has been taken out, and even this looks good for a 10 to 15% kind of an up move in the very short term. So both of the stocks look good to me. I think it's that kind of a market where, like you said, it's a broad-based participation, and especially the hot money has come back into the market, which is why we are seeing these moves in the mid and small caps.
Okay, Rahul, thank you so much for joining in with us this afternoon on ET Now.